So welcome to Adam Tavener, Chairman of Clifton Group.
Good morning.
Adam, we've been talking over the last few months about the fact that it's an incredible 30 years since you developed pension-led funding. Staggering amount of time, really, isn't it?
Makes you feel old, doesn't it?
I guess one of the first things to think about is how the world has changed in 30 years, and specifically how it's changed in relation to what we do, pension-led funding.
Well, it's changed really, and we've seen an interesting kind of cyclical pattern over the last 30 years. When we first started doing pension-led funding, we were very much aiming our product and services at small business owners who were looking to raise funding and for one reason or another either didn't want to engage with banks or simply weren't appropriate for a banking loan, and who wanted to be able to invest their own assets into their own business, which is what pension-led funding did. And of course, having developed it, we were, if not the first, certainly one of the earliest of the alternative lenders, as they're now known, the non-bank funding providers. And that remained that way for about 10 years or so. And then all of a sudden, after the financial crisis, a whole slew of alternative lenders emerged from the woodwork with a very wide and diverse array of offerings, but all essentially looking to service exactly that marketplace, the SME marketplace that was seeking funding and as I said, was one reason or another not suitable for the banking end of things. Which was great. I mean, one thing that has happened is that most business owners now are aware that there are lots of alternatives to a bank, and in fact, the bank referral scheme that we helped to introduce to the country underscores that. So that was all good. And then, of course, COVID came along, and a huge number of those newly launched alternative lenders just pulled up the shutters and went away and stopped lending, which was interesting. Speaking as the owners of the alternative business funding platform, we saw with some stark clarity what the effects of all these people walking out of the lending space can do. But through it all, through that entire cycle, pension-led funding never missed a beat. I mean, the ability to fund business owners who have a pension pot never went away, and our business flow and our deal flow is exactly as you would expect on a normal trading year. And it's really, really pleasing to see that kind of rock steady reliability that pension-led funding was able to deliver to its both existing customer base and the newly acquired SME clients. We're very, very pleased with that.
Yeah, indeed. When we look back over 30 years, if you look back at some of the sort of original clients and some of the sort of types of clients, and we look today, is there a difference, do you think, or is it a broadly similar group of people, or has that changed in the market?
Well, I think our client base genuinely reflects what's going on in SME UK. So clearly the most identifiable shift, if you take the hardcore of more traditional industries, I mean, we do a lot in hospitality, we do a lot in the property end of things, and all the stuff you might expect. The one area that has definitely seen a shift in emphasis and a considerable amount of growth is, of course, technology-based businesses who, by and large, tend not to have the sort of assets that traditional lenders favour. In other words, their assets are largely of an intellectual type rather than physical, and that therefore the ability to take security can be challenging. Whereas because pension-led funding absolutely is suitable for intellectual property as well as the more tangible types, they become an important addition to our customer base simply because the fit is so good. And so we've seen quite a lot of new interest from the tech end of the SME space.
Okay. 30 years, obviously the business has grown substantially since then. Though I think it's fair to say that pension-led funding remains sort of fairly true to its roots, doesn't it? So although there's lots of other activity going on, in the end of the day, the pension, the business owner's pension is the sort of bulwark of this, isn't it? It's that asset that really really makes all this happen. And that kind of control, I think, is something that you've always championed, isn't it? That sort of ability for the business owner, regardless of what's going on around them, to stay in control of their business. And that was very much so in the early days. Do you think that that control is still a factor today?
Yes, I do. I mean, I think the whole ethos behind pension-led funding is as true today as it always was, and it starts with a simple philosophical viewpoint, which is, notwithstanding what some of the pensions industry might want you to think, your pension pot is your money, and your ability to do innovative and interesting things with it remains as completely undimmed now. I mean, rules may have changed in terms of what assets are not acceptable, but the reality is pension savings belong to the individual, and if after careful consideration they feel that an investment in their own business is a wise and prudent thing to do, then absolutely that philosophy holds good. And you know, let's be honest about this, we've done thousands of these deals and created a tremendous amount of prosperity for SMEs across the country, which in turn creates employment and therefore payroll taxes, all those good things that come from a solid line of funding available to business owners. But it absolutely starts with the basic premise that it's your money and you have the right to deploy it in any way that you see fit, as long as that is in line with the regulations of the time.
Okay, well, that's a really positive note, something good to end on. So thanks for your time, and we'll catch up hopefully sooner than the next 30 years.
Indeed. Thank you very much.